Hi everyone, thanks for tuning into my video on the RSI indicator. I'm going to explain to you how it works and the different ways in which you can use it for your trading. Here I've got it attached to a Euro-Dollar 1 hour chart. The main way to use this indicator is to look for overbought or oversold market conditions. The way to determine if the RSI is overbought is because it will be above the 70 level, which is this line here. So anytime the price rises above the 70 level, the market could be considered overbought and you'd soon expect a reversal, which happened here. It didn't happen straight away. You can see here that's when it crossed, but eventually the market did start to take a downturn. And if it falls below the 30 level, then you would expect the market to be oversold and eventually it will start to head up again. Okay, another way to use the RSI is for spotting divergence. And divergence is, in the terms of a bullish trade, when the RSI is making higher lows. So here, the RSI is making higher lows and the market starts going up. Simple as that, really. Another example of divergence here, this time for a bearish market, where the RSI is making lower highs, suggesting that the market could be heading downwards, with probably even more higher probability considering the RSI is also overbought as it's above the 70 level. You just mark that here. So there's a divergence. Overbought. If we look at the chart, it looks like price hit some resistance here, some real indecision, and so that probably would have been a good time to look to take a short trade, which went almost 300 pips in your favor. And if you did get in around here, you would have had a stop loss, or you could have had a stop loss around 30 pips if you wanted to place it just above the resistance there, which would have been the logical place. So that would have gave you a very favorable risk to reward ratio, assuming you didn't exit the trade too early. And what you could have done is, had you entered there, as price moved down, you could have marked the new level of resistance here, waited for price to turn away from there and move the stop loss to just above this level, and that would have locked in the trade around 50 pips in your favor, and you could have comfortably let the rest run to a potential exit point, which could have been on an opposite signal of the RSI, as we see here. That would have been too early. However, we didn't have the divergence, which is why I always would check. Not only is the RSI above or below an extreme level, but there's also some clear divergence, which happened probably around about here. It came below the 30 level. We see the divergence there, and yeah, that's when the market really started to go range bound. So I would have liked to have gotten out somewhere probably around about there. So if we would have got in at the start of this signal and followed it all the way down here, we would have been looking at almost 300 pips, considering we could have had a stop loss of just over 30 up here. That would have been a pretty solid trade. Okay, well, not all of the RSI trades will be like that, as I will show you now. For example, just get rid of those off the chart. Okay, let's find an example where it didn't work in our favor. Let's actually look in, well, perhaps we can use this one. So here, again, if you would have just jumped in as soon as the RSI hit the overbought level here for a sell trade, you would have needed a stop loss of 60 pips or above to ride that one out, assuming you didn't wait for divergence. We don't actually really get any clear divergence arguably here. However, when you look at the price action, it's ranging, so there's no definitive trend either way, so that probably would have been a reason to skip that particular trade. Coming back to this one, you could argue, well, you know, we have the divergence here, we exited the sell trade here, the RSI is oversold. Is that not a buy opportunity? The thing is, if we put a moving average, just a simple 14 period moving average on the chart, you can see that price was still below the moving average when this happened. And even then, when it did move above, there's still quite a lot of indecision in the market, as you can see from these candlestick patterns here. However, it did form some good support around about this level, which was hit 1, 2, 3, 4 times before price really started to take off. So yeah, the moving average could be a good additional filter for the trades, along with the RSI extreme levels and the divergence, which we've already discussed. Here is another example. Going back to this trade, if you would have entered as soon as the RSI became extreme, you know, you would have, unless you had a really wide stop loss, you would have probably been cutting your losses short on that trade. Unless you didn't enter and you waited for price to cross the other side of the moving average, which is triple confirmation along with the extreme RSI and the divergence, that is probably a solid sell setup. Not to mention these candlestick patterns here that are showing the buyers are losing out, they're fighting, they're losing out, and eventually the sellers win. That big candle there. Okay. So really that's the most basic way to use the RSI indicator. I tend to stick to the 1 hour charts and above. I just feel that there's too much noise on the lower chart time frames. I mean, you will be able to catch some opportunities. It will just be difficult and like trying to catch a falling knife. I've heard some people explain it. As you can see here, you know, that's showing oversold, but it's clearly not, because look how far the price keeps going. So if we mark that 15-minute chart and go up to a 1 hour, you know, it's not even crossed over just yet. And even when it does, as I said before, we still want to wait for that divergence to occur before we even think about taking the trade. Well, in this instance, these two candles here would put me off regardless. So yeah, you can go up even further, take a 4 hour chart. As you can see here, it does help eliminate some of the noise that you see on the lower chart time frames. If we've got a bit of divergence on the RSI there, oversold, and that probably would have been a solid entry for a nice 100 pips with a relatively tight stop loss. So yeah, that's the basic way to use the RSI indicator. I hope you've enjoyed watching this video. Stay tuned for more.